Good morning, traders. This is Brad Matheny. Today is the 18th of September. Today, we are looking at a Fed decision day, and we're also looking at a gap potential pattern on the SPY cycle patterns. Please do notice that we have gone back into bullish trending, short term and long term. We had been in accumulation for a while and bearish longer term. Yesterday's activity, the top pattern set up a new bearish trending mode, bullish trending mode, and that is likely to stay in place until we get some major rotation. Remember, yesterday I told you that this upward price move above this upper level in early trading, this pink level that I changed yesterday from red to pink, make it back to dark red, is really indicative of price testing an area above this ultimate high. Now, this is the highest high that we had achieved way back over here. You can see it. Move this out of the way. It's the highest high that we had achieved back here on July 15th. This is what is called the ultimate high on Fibonacci price theory. This is, again, the SPY chart. If price is going to rally, it is going to rally above this level, and it's going to break away hard and try to move up to the 585, 595 or higher area on the SPY. That would invalidate this excess phase peak pattern in blue that I see, and this darker excess phase peak pattern here that's set up. These are the dual excess phase peak patterns that I had been warning about for weeks, indicating we could get a big breakdown here and we could roll potentially to the downside, trying to come down and fill this gap area here, potentially trying to roll all the way down into this area, which could still happen if we get a big breakdown in the SPY over the next 3, 4, 5 days. If we get a confirmed close up in this upper area, 566, 567, maybe even 560, call it 566.10, we are going to be likely moving into another bullish phase, which will move us strongly up into the 580, 585 area. So understand that, we're either going to break away from this trend moving higher, or we're going to confirm through volatility and roll into a breakdown period and eventually move into this area. This is right now, as I mentioned on Monday, today's Wednesday. It's probably better for traders just to take a couple of days off, let the markets decide what's going on, figure out what the markets are going to do, and then go ahead and trade the trend. This is it's a difficult time for traders. Do you position heavily for the short trade? At this point, I'd say that's a 60, 65% probability of success happening. Do you position heavily for a breakaway rally phase? I'd say that's a 30, 35, maybe 40% chance of happening. And personally, I think the bias is still to the upside. I think the U.S. economy is a 900-pound gorilla. I don't think there's any sign of a crisis or a hard recession setting up. So I think the Fed has the leeway to not raise rates right now, especially 30, 40 days before an election. I think it's more likely that the Fed will decide to raise rates in this area. Give you an example. The inauguration happens roughly here. 21st of January. Okay. And the election happens here on November 5th. There we go. There's the election. So me personally, I think the Fed has got about this window, let's call it here to here, to decide what to do with rates. And I think that window is going to give the Fed enough range, and it's only 30, 40 some days away. You have the clarity of the election. You then let the courts take over if there's any battling going on. You have some clarity with regards to policy. You move into the Christmas rally phase. You let the market settle through the Christmas Santa rally phase into the inauguration. And once the inauguration is complete, where that new policy will take place, I think this is the area the Fed will likely make a decision to maybe raise or lower rates, given what's going on with the economy. And like I said, there is no crisis event right now. Really, there is no crisis event. Look at this. The Fed has been raising rates since 2022. Look at what's happened since 2022. There's the peak of 2022. We had the contraction. We had the rally. We have seen essentially from this low up to this high, we have seen a 57% rally in the SPY since the Fed started raising interest rates. So understand that we're seeing a pretty healthy rally phase right now, and it is because the dynamics of the markets have changed. I've talked to people about this for years now. The US economy is the 900-pound gorilla. The US dollar is the best currency on the planet related to other currency rates. And until that dynamic actually changes, I don't see any reason why the Fed has to be aggressive in any rate cuts. In my opinion, a 0.25% rate cut would be, a gift. It would really be a gift. It would be the Fed saying, "Here, have a cookie and be quiet." Okay, there's no reason for us to cut rates. There's no reason for us to even be concerned with cutting rates. If they gave us a 25% rate cut, it would be essentially, "Here, we give you something, now go away and be quiet." Okay. And I don't think that, I think the markets would rally. I think they'd get what they wanted. But I think in the ultimate term, we don't have to worry about any rate cuts or any major rate decisions until 2025 or 2026. Okay, let's take a look at the QQQs. So today, like I said, big volatility day. So now you can see here, I'm going to draw a little line across here and across here, these rejection points. Very critical downward rejection point here. You can see I've drawn a lot of lines here indicating what would happen. We either have this kind of a breakaway channel here, or we get this rejection in this area and move downward into this area, which would be our first level of support. We could rally out of that level possibly, or we'll come down to a secondary or maybe even a third level of support. Ultimately, if price continues to want to move downward, it will move past this level here and then past this level here into some ultimate support level back over here. But that is assuming that we enter into some broad downward cycle phase, which would really be a counter trend phase right now. There's nothing, in my opinion, there's nothing of a crisis event coming other than just a massive pullback. If you wanted to argue that, Brad, look, we've had this massive rally over the last year and a half, 2 years plus. Why couldn't we pull back? Well, we could. Okay, we honestly could. We could pull back into this area or this area, and from these lows, look, this would be a very healthy pullback here, coming down into this 382 level, right into this level here, would not be unhealthy. Literally, folks, it would not be unhealthy. Coming down, even down into this 50% level, would not be unhealthy as well. That would be a healthy price pullback, setting up a big, broad rally into 2025, 2026, and beyond. Do I think it's going to happen? I'd put it at about a 60% chance that it could happen right now. There's a lot of things that have to take place for me to be able to say, hey, this looks really good. It looks like it's, oops, It looks like it's going to happen with some efficiency. And what has to happen first is we have to break this flag. So right now we're still in this pattern. We have to manage here, break this flag, start to head downward. Once we get past this flag break right here, this breakdown, then my target becomes this level. Then it depends on what happens at this level, whether we break below it, then my target becomes this level. Then if we break below this, my target becomes this level. Then if we break below this, okay, now we're talking the 382 level. And at that point, then I will say, yep, we're having a fairly sufficient breakdown, but it all starts with this. It's like a domino effect. A, B, C, D, possibly E. Okay. And it's probably going to happen well before the election. If it were to happen, all these lines, get rid of this, leave that, get rid of this. Okay, leave those. If it were to happen, it would happen before the election. It would happen like this. Something like that, where there would be a basing bottoming pattern somewhere in here heading up before the election. So understand that that's what it would look like potentially. It would be aggressive and probably base or bottom right before the election, leading into a Santa rally. So it gives you an idea of what could happen. I'm not saying it will happen. I'm saying it could happen if we get the breakdown. Right now, everything is contingent upon this level here. Okay, let's take a look at gold. Gold and silver should be moving into a rally phase. Yep, here we go. This is based on my cycle patterns for gold. We're looking at another potential breakaway trend in gold, trying to move up into the 2640, 2650 area, right up in this area. We're going to be looking for gold to make a big, quick move here, probably related to the Fed decision. Could happen before Monday or Tuesday of next week. So be aware. Big, quick reactionary move here from these opening prices, 25.97 up to about 26.40. It's about a $45 move in gold. I would say anything above 26.30, just call it good and get out, even though it could go a bit higher. Remember, you want to just target your price, your target area here in gold, and get out. Eventually, I think we're going to roll up here in a 2660, 2665, roll into a bit of a downtrend if the markets break down. If the markets don't break down, yeah, gold's going to potentially have some sign of a sideways move, but really it depends on if the markets break down like I expect ahead of the election, then gold and silver will have this broader kind of a panic pullback. If they don't break down, then this becomes a lesser and lesser likelihood outcome. So it all kind of depends on what the markets do ahead of and after the Fed, but prior to the election. Okay, silver, trying to go quickly, guys, because yeah, silver going through 6 or 7 charts in 10 minutes means about 2 minutes each. So silver again, same setup. Gold's moving higher. Silver's going to be a bit delayed. We'll see how gold reacts today with the Fed. Easily, silver could make a move up here to 31.75, $32, maybe a little higher. Just as gold is making a bigger move, a $40 move, you could see a 50, 60, 70 cent move here in silver. So that would put you up into this 31.90, $32 area. But then, like I said, be prepared. If we do get some rollover, be prepared for that sharp kind of a panic contraction that may set up. It may only last 2, 3, 4, 5, 6 days. I don't know how long, but these are normally very quick downtrends, followed by an immediate recovery, followed by a week or two of sideways trading, and then a very solid advancement up to the upside. Okay, so again, if you're going to be long silver and you get up above, say, 31.80, 32, I would probably urge you to start looking at pulling a little profits off, protecting your assets, and then maybe setting up, kind of waiting for some sort of a crisis pullback type of event. No, it's not really a crisis. Let's call it a panic event, like a flash downward trend in the equities market, giving you an opportunity to reload up back down here and below 31, maybe below 30.50 in that area. Okay, and then lastly, we go to Bitcoin. Good solid rally yesterday, flagging out right into this blue flag that I drew a couple days ago. We are really just consolidating here, and the next phase is a downward cycle phase. If I'm correct, we've got this A, B, C, D into this area, and then an E rotation. So the next move is going to be right down here at about 58,000, maybe a little lower, 57,400, like I said yesterday. So this is perfect. It's rolling over just like I suspected. And we're going to be probably looking around September 23rd, maybe 22nd, 23rd, 24th, setting up some sort of a basing lowering pattern, lower pattern right around 58,000 plus or minus 300 or 400, and then rolling into an expansion phase, I believe. Okay. Well, that's it. You can hear I'm sounding a little better. Went to bed early, had some great food last night, and you know, back to doing what I do best here. Hopefully, you guys are enjoying this. Again, really appreciate the comments yesterday. Let's keep it up. Let's all get some, as I say in the video. And like I said today, my plan is to just let the market settle into the Fed announcement and then decide what my plan is after the Fed announcement. I'm not aggressively positioned for any of this. I don't want to be. That's where you put yourself in front of a train, like I told you yesterday. If I think I'm going to get into ahead of something, and I know what's going to happen, and I can take on excessive risks, then go for it. Bet the farm on a direction, see what happens, see if you can change the direction of a train by standing in front of it. The markets are going to do what the markets are going to do, and the Fed will do what the Fed is going to do. We'll see what happens today once they make their announcement. Okay, guys, talk to you later.